Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Raymonds. Will the stock go higher ever or will it remain in the dust that it is at the moment? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Raymonds, a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to portfolio, a lot of podcasts that I put up every couple of days time on markets and events, and also my watch list, and a lot of stuff that I do there, writing articles, etc. So come on Patreon for a $10 membership a month, and hopefully you'll get a lot out of it. For detailed market or company talk specifically, you have a number of companies with you, you can directly email me and we can work things out. Now about Raymonds, established in 1925, it is a diversified group with majority business interest in textile and apparel sector plus real estate. So also it has presence across diverse segments such as FMCG, engineering and prophylactics in national and international markets, deal in high-end property construction across India. So majorly their business was into textile in the 1980s, 90s till early part of 2000. Then they diversified into you can say infrastructure or real estate, and they have a huge real estate arm, and they also went ahead and provided engineering and prophylactics solutions to you can say business clients in India and abroad. 11,000 stores are there across 300 cities in the fabric market in India. The market cap of the company is just under 2,000 crores. If you look at the financials of the company, then the sales had dropped by around 30% in this Q1, as with all other companies, and across the board that has happened. So Raymond is not an exception. So sales went down by around you can say 600 crores or so, 500 odd crores, that's 30%. And from a profit of 68 crores, the company has gone into losses. Another company that has posted losses, 57 crores of losses. High interest cost, very you can say expected, because of their real estate arm not doing that well over the last 2-3 years. Extremely bad you can say numbers from the real estate business, and even textile is as a sector has totally sunk after the shutdown we have had with February March. So over the last 6 months there have been a complete pandemonium in the textile part as well. So two sectors of Raymonds that would have done virtually nothing for at least 45 days of this quarter, and that's why the losses and the drop in sales. The promoter holding and institutional holding is decent and good enough, not huge, but decent and pretty strong. A return on equity of 7.5%, operating profit margin of 8% is nothing too great to write home about. It is average in nature, but when you consider that it has a major stake in the real estate thing, and and a lot of things in which a lot of interest costs go into the things, then return on equity looks good, but for a consumer company it is extremely low. If you look at the performance of the stock, so stock has fallen 88% from the January 2018 high. So it was trading at 800,000 levels at that point of time. Now it is trading at 250, 260, more than 1,000 at that point of time. Have lost 70% of its value in the March fall. So when the fall happened in February and March, it fell very badly, not 40 or 50%, but around 70%, and virtually vertically during that period. It has recovered little bit from those lows. It has recovered 20-30% from those levels, but has again started falling with the couple of days of sell-off that we are seeing in the mid and small cap indexes. And this is what I was fearing, that companies like Raymond and other companies which have run up very sharply in short term may fall vertically, and that has been what has been being witnessed over the last couple of days. Numbers have been a drag on the stock, and numbers are not improving. So if we talk of even before the pandemic, even before when lockdown or shutdown happened in 2017 and 18, up till FY18 or early part of FY18, things were looking pretty decent. But post FY18, at least for the last 3 years, now this is FY21, 3 years the company has virtually shrunk into a very difficult, you can say, difficult hole. And now I would say that the numbers will continue to be very, very, you can say, bad, if I may use that word, over the next 2 to 3 quarters. High debt is a huge concern, so even if they do very good sales, some profitability do come out in the on the operational front, debt will eat into it, and you will have losses on the bottom line. So a difficult company to understand, I must say this. So I did not make a video on companies like Raymond, because it is extremely difficult to understand where the numbers are coming from, what are the different income sources and different businesses. It is like a conglomerate, so it is difficult to understand the complete business. But what I have gathered from whatever research I have done, that the company is set to post not very great numbers over the next 2 quarters, unless the real estate thing really gets going. So, what have been the reasons for the decline? A sector under stress for a number of years. As I mentioned, both textile and real estate are not doing well for at least 3 years now. It will be 3 years till March. And the current scenario of lockdown, shutdown, and a current scenario in which people are not very willing to spend, because they are already losing jobs, so they lost jobs. So spending has reduced. So I think real estate would struggle at least for the next 2 to 3 quarters. Same will be with the textile sector. It has to be a real shopping spree from on the parts of the consumers for even textile to really go up. Right now people are saving their lives and livelihoods. So that's why FMCG companies or core FMCG companies would continue to perform. Investors itself are looking for safer bets. They are looking for options in which they can park their money even with lower returns, but at least get out of this phase with some sort of a return, and then be alive for the different, for the best part of the economy, because the economy right now is in total doldrums. So you have to understand that. So both textile and real estate sectors in huge trouble, and business has been totally stalled for at least 45 days. That's full April and probably 15 days of May, and that is why the numbers have really been abysmal. And it looks like things are coming back to normal, but it will take a little bit of time before even 50 to 70% of normality in the sectors that Raymond is working in would come through. So you have to wait at least 2 quarters, and that's why investors are not looking to put money into the stock. If you look at the technicals of the stock, trading well below the 200 DMA of around 380, 385, currently trading at around 240, if I'm not wrong, between 240 260. Strong supports lie between 210 to 233 levels. Short-term support was 265. It has just been broken today, I think in the last 2 3 days, and the stock is trading below 265. Probably it's headed between that region of 210 to 233. Heavy up move is only expected above the 200 DMA. So really extremely weak on charts. Keep a stop loss of 230 if you're holding on to it. There are better, you can say, companies in the consumer domain that you can invest into. So, in my opinion, avoid if you have bought it. If not bought, and if you have bought it, keep track of developments and keep a stop loss. If you're doing well, if you have bought it at very low levels, then probably hold. Probably when things normalize, the stock will zoom. But I think exit is a better strategy in this company. So this was a video on Raymonds. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.